Hey guys, what's up? This is going to be the video of how I determine a bias on a weekly and daily level. I do it a lot differently than other traders. I usually set a weekly bias and then follow an intraday pattern through there. I'll kind of get into the nit and grit of everything so you guys can kind of understand how I set my bias. It's a lot different than others, so yeah, stay tuned in. I usually do my bias starting at Sunday open, looking at where the week is going to go, and basically what I am trading is a weekly power of 3. Typically in my trading, I only take about 2 or 3 trades a week. I'm playing the manipulation leg of a weekly power of 3 or trading towards the manipulation leg and catching the distribution of that manipulation leg. If you don't know what power of 3 is, I do have an in-depth video of my power of 3 strategy, which is in my YouTube channel, so you can go ahead and find that and get familiarized with the concept of power of 3. The whole idea is simple. Every candle does 3 things: accumulation, manipulation, and distribution. That's what I'm doing here and planning my week based off of it. So I start top down. I'm looking for PD arrays where price can possibly manipulate to. Sometimes I like to start with the monthly chart, but it just depends on where we are with price. If I know we're far away from a monthly gap, I jot down into a weekly time frame. What you're doing here is you're marking out every high time frame PD array that is available that price can manipulate into. In this chart example, the overall trend is bullish. So what you want to analyze on the weekly time frame is, where is the market going? What's the trend? What are we drawing towards? If we're at all-time highs, we're most likely, more than not, going to continue to all-time highs unless some news comes out that would say otherwise. But in this example, we are trending up, markets respecting bullish PD arrays, and the only way we can continue higher is by manipulating into a PD array. What I'm looking for here is high time frame PD arrays I can manipulate into. I usually look for 1 or 2, and on the weekly level, I don't go lower than the 4-hour. Unless there's no PD array presented in the 4-hour, daily, or weekly time frame, I will then look down into these lower 1 hour and 15-minute time frames. But more often than not, a low or high of week is going to be created in a 4-hour or above. So I'm looking at those PD arrays. I've already found the weekly, so I'm not going to look for anything else. Now, when the week starts, what I'm basically looking for is us to trade towards the manipulation area, which is going to be this weekly fair value gap. My bias until we hit this weekly gap is bearish. We're going to play shorts on a daily level. So Monday I usually sit out. Like I said, I only take 2 or 3 trades a week, so I'm not really trying to force a trade into this weekly gap if it's on a Monday or Sunday open. Basically, on these time frames, what you're looking for is PD arrays that the daily can manipulate into. So a daily time frame, all you're looking for is PD arrays that price can manipulate into. Now, a daily high or low is typically made in a 1 hour or above. If you want the best chance of getting a high of day or a low of day, you want to look for 1 hour and above. So 1 hour, we have pretty much nothing here on this Monday open. We have no 4-hour, and we don't really have a daily. This is within the daily chart. We will just wait this trade out and wait for the next day. Okay. So now here's a new daily open. Don't have much here either. We do have this daily bearish for value gap where price can manipulate into this day and go lower. So we'll see how that plays out. You can also look at 15-minute gaps to make your daily bias and help you find a PD array lot. Like I said, more often times than not, it's going to be in a 1 hour or above. These are the only PD arrays up here that I see. Like I said, if there's no PD arrays presented in a 1 hour or above for a daily manipulation leg to be made, you can go down into a lower time frame. 15 minutes is the last point of contact you can go to. Okay, well, looks like Tuesday is going to make the low of the week here in this weekly time frame level. Now, the way you trade weekly gaps is the aligned time frame is a 4-hour execution model. So you either look for a 4-hour change in state of delivery and then start trading from there, or 4-hour rejection block. If you watched rejection block video, please watch that. That's how you would trade this. For me, it'll be a 4-hour rejection block. Okay, we made the rejection block. We come into Wednesday. This 4-hour closes here. And now we just wait to see how price will respect. Now we're into Wednesday. And like I said, I only take 2 or 3 trades a week. And I'm showing you here in a real example. Now that we have our 4-hour manipulation, we've made a rejection block. We've almost changed in state of delivery, but not quite. But we've made this rejection block, which I'm pretty comfortable with. I love the close here. One, like I said, a valid rejection block is a rejection from a fair value gap, and it's sweeping liquidity. It's sweeping tons of liquidity here these lows are getting swept, and then this low right here is also getting swept into a fair value gap. So that makes this a pretty A+ rejection block to me. This is a trade I actually took. CE would be limited here if you're taking a rejection block in good market conditions. Target would be all-time highs, or you could take all these small low resistance highs up, whichever way you're comfortable with trading. I usually like to go for obvious draws on liquidity, which is going to be this all-time high. We'll wait for that to play out. I'll go on the 15-minute chart. Okay, so now here a new day is about to open. Now we have a new daily open here. This makes the setup even better, right? We have this 4-hour rejection block here where price can manipulate into this daily, into this 4-hour rejection block. The daily and the weekly can manipulate into PD rates such as rejection blocks, fair value gaps, order blocks. The most A+ one is going to be a fair value gap like this weekly for this Tuesday low of week. Now, for a daily, it can, the most A+ would be a 4-hour or 1-hour fair value gap. If that's not presented, a rejection block can also be a great low of week. So we have that here. So I'm going to go ahead and limit this right here where it could be Wednesday low of day. Okay, tagged in. Now, you want to ride this up to the high. You could do a previous day high. You can do all-time highs, whichever way you're comfortable. Just for the sake of this video, we'll do previous day high since most of you are on evals and fundeds and cannot hold trades pretty long. So ride this out. Okay, cool. And then what we will do here is I'll show you trades going on throughout this week to kind of finalize everything, okay? So that would be your trade for that day, unless you just held on to these highs up here, which probably don't get hit in this session here. Okay, so we have a new day, which is going to be Thursday, and you're just continuing the pattern up, okay? So when you open up the charts, all you are going to be looking for is the daily manipulated already. If it is, you're catching a continuation. If it's not, you're looking for the manipulation leg to catch the distribution up. Let's mark out our PD arrays here. We have this gap is mitigated. We don't use mitigated gaps on the hourly, so this gap is perfect. Okay, it's 4-hour right here. The daily pierces right through it and then goes into this 15-minute gap here, which is also valid as long as it has a good rejection block out of that 4-hour, which it does. And it made the CISD, so that's perfect. Basically, all you're looking for is a confirmation entry here. So if you're trading in London session, let's just go to New York for the sake of this video. Okay, New York. Didn't quite sweep this low. So this should be a protected daily low. New York, now we know that this is a protected low. All you're doing is looking for a way to trade back up. The way I trade continuations is a 15-minute gap. Okay, that right here gets hit. Might tap 10 a.m., but all you would do is take a 1-minute CISD. It's down here, 1-minute CISD. Let's just back up a bit. And you just target the next obvious high. I know it's taken previous day high already, but you could just take it up to here. It's New York PM though. See how high it gets. Okay, you'd get auto liquidated, but still pretty great. Okay, now we're heading into Friday. Let's just say for the sake of this video, you got auto liquidated on your funded. Now we're just looking for PD arrays on this daily. So nothing on the hourly here that's standing out. 4-hour here that's standing out. So now we have to be to 15-minute gap. So have anything from here. So we'll just see how price reacts. Also Friday, so best price action. New week opens up and then smacks all-time highs. So would have been able to take Friday, but your most probable trades would be Tuesday and Wednesday. 2 or 3 trades would have paid you more than that. That would have been like $6,000. So you guys understand the concept of that. Looking for daily bias. All you're looking for is where it can manipulate into. You can catch the manipulation leg.